Okay, good afternoon, everyone. Thank you so much for taking the time, especially on a busy Thursday afternoon. I know I say this typically every week, but it's so important to me, and it should be for you all, to walk away with nuggets, right, with information that you can use this afternoon, okay? Take notes. We have this Q&A panel that you can expand or minimize. Type away as we're talking, okay, as Gary is speaking, our featured presenter. Fire away. We want to hear from every single one of you. And number one, we want to make sure that you're comfortable with the products, with the carrier, with the presentation. So please fire away. We're going to answer everyone in real time. If we do not get right back to you, we will circle back as soon as we hang up the call, and then we can always patch Gary in for a conference call or a three-way call or whatever is needed, but we can handle 99.9% of the questions and comments, okay? But just know that we are going to make sure that we get every single question answered. All right, so what are we talking about today? So it's been a while for us, right? We have North American A-plus rated Salmon's Financial Company, and there's right now a ton of noise in the industry. Okay, there's a bunch of huge carriers, right, that have been acquired by companies that are overseas, right, public companies that we all know about, right? And I'm not going to talk about it today, but my point is, when you have a company like North American, A-plus rated, offers excellent index products, okay? They have a new product coming out, and I don't want to steal any of their thunder, okay, on Monday morning that you're going to hear about today. But my point is, when you talk about financials, when you talk about stability, when you're out there speaking to your family, friends, network, prospects, leads, you have to make sure the company's going to be around, okay? When you talk about conversions, underwriting, marketing assistance, it's very, very important. Yes, Levinson has over 90 carriers on the life and annuity side, okay? But when you're talking about carriers of this caliber, maybe we have 10 to 15 tops, all right? So always keep that in the back of your mind as a licensed insurance agent, financial advisor. Very, very important stuff. So as soon as we heard about the new product offering, and I know we have a lot of newer agents on, we have a lot of Levinson seasoned agents that have been with us for over 20 years. Bottom line is, as soon as we heard about the new product offering, which again is launching Monday morning, I asked Gary personally, I said, please, I know it's a few days early, but can you host a webinar for our agents so they get a little taste of what's to come? And then we're going to also talk about everything else that's available today. Okay, so great stuff to come. And this is an important training for all of us. We have all of our marketing team on as well because we're all here to learn. So let's move forward. What I also want to mention is North American, and I want everyone to understand, they have some excellent FIA products as well. We have a separate training where we dove into the annuity products. So we'll send that out in today's thank you email. And then if you do have any questions on the annuity side, again, just let us know. But also keep in mind, the annuity side is as strong as the life side. Okay, so we can help you on both corners. What we're going to do is at the end, a question of the day, and we're giving away, so we're making this fun today. We're going to have two giveaways. So we're going to ask our question at the end. Whoever answers first and correctly wins the Apple AirPods, the new generation. They're awesome. So we're going to send those out, and then whoever is second, okay, we're going to announce the names, whoever's second, and writes their first application with North American, they're getting that new Apple iWatch. Okay, so two-part incentive here. So whoever answers first and correctly wins Apple AirPods, and then whoever writes the first application with North American after today's presentation, Apple iWatch giveaway. We'll announce both names at the end. So make sure you're on until the end. Let's keep moving forward. What I also want to talk about quickly is shifting gears into why Levinson. So we know about North American. We've heard about North American. We know they're a great company, but it's important for you all to know that you're in the right place with Levinson and Associates, right? I know, like I said, some of you are very familiar with us and our entire family, all of our employees. In fact, we literally have 20, almost 25 employees now over 4 states. So we have you covered across the country. These are some of the reasons why us and not the other 2 or 3 IMOs you may work with, right? Because we have a big leg up. And most important, okay, what's not even on the slide is customer service. So we are here for you. And I always say we're not perfect, but we're 99.9%. We're 99.9% there, and if there's a 0.1% chance something goes wrong, maybe you got an answer you didn't like from a carrier underwriter, me and Carrie are always here to jump in and try to make it right for you. It might not always be the answer you want, but our promise is we're going to pick up the phone or reply to your email and do the best we can with our carrier relationships for you all. Okay, so that's a big deal. Cash for contracting. If you already have a contract with another IMO, you want to move it over to us. We give you cash with your first paid app or orphan leads. You get to pick. And then once you're writing at least 10,000, we have complimentary orphan leads that we give you. So when you hit 10,000 in 12 months, we send you out a batch of orphans. Top right-hand corner, the annuity MAP program is awesome. Here's why I love our MAP incentive program. When you talk about incentives, especially on the annuity side, you always hear minimums of 5 million, 10 million, 50 million, okay? I wanted this to be realistic. I wanted some of the newer agents that are just starting off to be incentivized, even at $100,000 on one case, okay? So we have a very, very low buy-in at $100,000, and then it goes all the way up past $1 million. But lots of incentives, lead programs, tools, platforms that we throw in at no charge. The iGenius playbook, think of this like a menu. Okay, we have 3 separate playbooks: new business, contracting, marketing. Okay, it's like a Denny's dinner menu. Everything that we offer is at your fingertips, and you literally point and click, and then an image pops up with all the info you need. Very, very easy to understand, because I know everything that we offer can become overwhelming, and we get that. So we simplified it with the playbook. Bottom right corner is our annual Agent Expo. Okay, now this is a no-brainer. Complimentary. Okay, we take care of all meals. Typically, we do a dinner for the out-of-town agents the night before. We have a couple keynote speakers, agent panel. You don't want to miss this. It'll typically be around March, April. Okay, so figure March, April of 25, and then we'll send out a save the date. Probably in the next 2 to 3 months, you'll see that. And then we have an incentive. So all life and annuity premium gets wrapped up into one incentive for you to be able to fly with you and a guest round trip to our South Florida beachfront resort, and we take care of all expenses. So you want to start working on that life and annuity premium with all carriers now. North American is included on both life and annuities. So very important stuff. Let's keep moving forward. What I think is extremely important, even more important than the first 3 slides I spoke about, is feedback, is agent feedback from you all, right? You can say, Bill, you've been doing this 25 years, Carrie's doing this since 1972, and you sound wonderful, and I want to hear from other agents that are like me out in the field in Key West, in Missouri, okay, in Hawaii, okay, which, by the way, we literally have agents in all cities now, all states and most cities. So this is our Facebook review page and our Google reviews page. And when you think about, and you're probably scratching your head saying, I listened to all your trainings, and, I do talk to other agents, maybe at the expo, but I also want to be reassured that I'm at the right place, and there's other agents using your lead programs. Maybe if something didn't go right and they needed a release, you gave it to them. What I want you to do is go to our Levinson Facebook page, okay, and see what the other agents are saying. Go to our Google reviews page, okay, and check out what Terry says, and Stephen and Christy, okay. Now, Christy happens to be our marketer, and she's on this call right now. Christy was sharing her feelings about one of our other employees in contracting. Okay, so here, check this out. Bottom left corner, just wanted to say you can feel Saskia's smile on the other end of the phone when she answers. That's incredibly hard to do. She nails it every time. I thought that was important to show you all. Okay, that's our employees talking about other employees. That means the world. She shared it with our whole office. Okay, so that's a big deal for us. And we try to stay at that level 24/7 as much as possible. Top left corner, top-notch service all the way around. Cannot think of possible improvement, Stephen. That came from our Facebook page, the Levinson Facebook page. You can check it out. But it means a lot. This makes our day. This is huge, and this is what I wanted to share. It came in this morning, okay, and there's no hiding anything, right? First, last name. This is on our Google reviews page, public info, which, by the way, we're at a hair under 5 stars with all reviews since day one, which is almost impossible to get. So very proud of that. But here's what I want to just show you real fast before we get to the next slide. And then, by the way, Gary, our presenter, is going to be starting in about 2 minutes. So I know I'm ranting a little bit, but I'm so proud of this stuff. And I'm proud of you all because we would never be here if it wasn't for you and you sharing this stuff with us. So on the right side, I'm going to just point out a couple things that are important. So this is one of our agents, and Terry is using our lead program, our mortgage protection lead program. We all know there's no perfect lead program. They don't exist. Sometimes when they're great, they're only great for like 6 months, right? Or maybe a year. And then year 2, all of a sudden, oh, the service isn't the same. The leads are resold 18 times, okay? Well, not our programs, okay? Are they perfect? No. Do they work? Yes. And here's a perfect example. So this is Terry sharing, and you can check this out after the fact. So what he's saying here is, I'm going to touch some of the highlights. We got probably 15 leads in the first 2 weeks. We were able to do a $500,000 30-year term on a husband and wife for mortgage protection. These will more than pay for the lead campaign. I've never met this couple face to face. We did all of this over the phone. I'm going to scroll to the bottom now. This is the best part. Nothing huge, but a great opportunity. We started off on the right path from the beginning. This may well turn out to be some of my best clients 20 years down the road, all from a mail piece that we sent them regarding mortgage protection. Thanks to Andrew and the entire Levinson team. Terry here, okay? Terry sent this again this morning. Check it out when you can. This is everything, proof in the pudding, okay? It doesn't get any more simple than this and clear. Right to the point here. And by the way, we have the same program on the annuity side, IUL, and mortgage protection term, actually, and final expense. Okay, next slide is our 411 leader. So every other week we send this out. This is like our newsletter. Everything you need to know with all carriers and products at your fingertips, lead programs, technology, sales platforms, everything is here, and it's all updated every other week. And if you need to see, let's say last month for whatever reason, everything's on our website. You can check that out when you can. In fact, we even have this on our mobile app as well. Let's keep moving. This is incentives, cash incentives we all love to hear about, right? I know I do, so I'm sure you do too. This is our Amazon for insurance products. Insure Me Now Direct. We are constantly adding new products, new carriers. We made this so easy, okay? And some of these products are guaranteed issue, starting at just a few bucks a month. Great door openers. Think about associations, groups, small business, whatever the case is. It literally is Amazon, okay? It's like going to Amazon and picking out, food for the dog. I need new tennis shoes, a new hat for the gym, whatever, okay? Everything in one shopping cart. Same exact mindset for insurance products, okay? And we have everything, by the way. It's not just inflated term products or final expense. No, guaranteed issue, traditional term with banner. Everything is instant decision. Some are guaranteed issue, so instant approval, okay? So easy. It's about an 11-minute process from quote to policy or quote to decision. So again, 5 for $500, right-hand side, what we're doing here with your first application on the platform, Insure Me Now Direct, $150 cash. Left-hand side, if you write your first app on Banner's platform or through iPipeline on our own platform, $100. Okay, $100 off the platform, $150 on Insure Me Now Direct with your first app, and this is the least expensive term available today, as you know. All right, our annuity contest, and then I'm going to flip it over to Gary. I know he's been waiting patiently. So this is another great one. Okay, I personally handpicked this yacht charter for our agents, and North American is included in the contest. Okay, so think about this. Starting at just $1 million in FIA premium, we are chartering a yacht half day for you, okay, in Fort Lauderdale, yachting capital of the world. Everything's taken care of. And then at 1.5 million, so another 500,000, we fly you and a guest from anywhere in the country to South Florida, to Fort Lauderdale to spend a half day on the yacht, okay, on us, plus a $250 gift card. Okay, very achievable. Okay, my second to last slide, and then we'll flip it over, is our top IUL carriers. You're going to notice top left corner, North American, also Stonewood software compliant. That's a big deal, okay? And by the way, we can run these sales presentations for free for you, okay? Any one of our marketers can do this for you. If you want to be a VIP member in the program, participate in all their events, we have a discounted price just for Levinson agents. But what you're going to notice here, I'm just going to say a couple words and then I'm going to turn it over. But it's very important for you to know, we go out and handpick the top carriers and products for every situation in the life and annuity space, but we don't want to have the Burger King and McDonald's on the same corner. So every carrier product has their own little niche, okay? And I think what you're going to find, especially in the IUL space with North American, is they have all bases covered, especially with the new Builder 4 that I'm going to let Gary talk about a little more. So let's go to our feature presentation of the day. We have Mr. Gary Proco joining us from North American. Gary, are you there?
I'm here. No, we're excited
to
be here today. We're excited to be here today, Bill. And it was funny. Are you there?
Yeah, I can hear you.
Yeah, so it was funny. Just in the last couple of days, Bill reached out to me to see if we could get this presentation for you today. I was actually on an airplane trying to work this out, so I'm glad we were able to make this work. And Bill, thanks for the accolades and the positive reinforcement. We've been doing this for a long time. We've been doing this with Levinson for a very long time.
That's right.
And so we're excited to share with you today the overall portfolio. We're going to spend most of the time on the new product that's going to roll out officially on Monday, the 12th. But we'll touch a little bit on everything. If you're not familiar with our portfolio, it'll be some good information for you. If you're familiar with us, it'll be a good refresher, some reminders as we go through this. So we'll go ahead and get started. So one thing I wanted to mention about North American that you may not be familiar with, Bill talked a lot about, you got public companies, you got all different types of carriers out there. We're very unique. We're very different. We are the only employee-owned ESOP insurance company. What does that mean? It means that every employee, every case manager, every person that works within our organization has ownership in the business. We're not going to be purchased by anyone. We're not going to be foreign owned. We have to be sold to that for that to take place. That's not going to happen. We're not going to be, there's no venture capital that's going to be used to purchase us. And because our structure is very unique, it enables us to be very fluid and very agile because of the way we're structured. And nobody saw that more than during COVID when we were able to pivot much quicker and have much more success early in that environment that we were in than pretty much most anybody else. So I just wanted to touch on that before we get into the product. So this is the product spectrum. So we're going to talk about each of these products, a quick overview of each of these. We'll spend most of our time on the Builder Plus 4. You'll see it there to the right. But from a breadth of our portfolio, each one of these products are ranked in the top quartile in their individual space and their individual product space. And one thing about the Builder series, you'll see the Builder Plus and the Smart Builder and the Protection Builder. Our Builder series IUL since 2006 when the first one was introduced have performed at or above the original illustrated rate. So these things are very consistent. We've been able to do these things very consistent over a long period of time. One note, all the products have accelerated death benefits. They all have critical, chronic, and terminal, including the term. So every product in the portfolio has the full trio. So let's get started with Advantage Term. So we have 4 different durations, 10, 15, 20, and 30, convertible to any product in the portfolio. And you'll see, I'm not going to go through all this in detail, but you'll see here the term duration, the 10 years convertible for 7, 15, 12, 20 years convertible for 15, 30 years convertible for 20. If they convert in the first 5 years, then the living benefits are automatic. So whatever permanent product they decide to move into, they will automatically get the living benefits. If it's beyond 5 years, then there'll be some limited underwriting to determine are the full living benefits still available. I think in most cases, depending on if it's year 6 or 7, they probably are. If you get out years 18, 17 of a 20-year term, their health may not be as good, so they could have some limitations on their living benefits. So you want to make sure that when you sell our term, and actually with any term, from my perspective, you should be talking about conversion every single year. Every single year, bring it up. They don't have to convert all of it. It can just be a partial. They can convert into a current IUL at North American. They don't have to convert into a new one. But at least it's a good topic of conversation, because at the end of the day, the sooner they convert, the cheaper, the less expensive that permanent product's going to be. So if you wait to the final year of the 20-year term, it's going to be very expensive. So have the conversation as early as possible. You'll see the minimum death benefit's $100,000, and I think that's pretty much it. I think from a competitive perspective, with full living benefits, it's one of the most competitively priced term products in the market today. We do sell a lot of term because of the living benefits.
Gary, this is Shar. I just want to add that regarding the conversions, what I think is also really good about that is that we will actually send a letter to the client, letting them know that they're, I think it's 90 days, they're approaching the end of their conversion period. The agents their letters will be posted to the website. So you'll want to be sure that you enroll in notifications so that you're getting those notifications and can meet with your client. But it's nice to know that we send out the letters to remind the client years down the road.
Yeah, thanks, Shar. And as I said, I'm encouraging you to talk about conversion every year, so you don't get to that last 90-day letter. So the next product is the custom guarantee. Most carriers that had GUL, just a guaranteed universal life policy, in the past are no longer in that business. They've totally pulled out of that space. So there's a very limited number of carriers out there that actually have this product still available. And this is for that generally older client that's not really looking for accumulation. They're not looking at, the cash value as important. What they're looking for is that specific duration of guaranteed death benefit, a 25-year period, 35-year period, 40-year period that gets them into older ages. They just want to guarantee to age 85 or 90. It's more for maybe just a pure legacy conversation where I got this much money, I just want to put into something and give my children or grandchildren the most death benefit tax-free as I can. So this is a GUL. It is one of the most competitive GULs in the market, especially on short pays and single pays. It has some unique features built into it. So it has a premium recovery endorsement, which you may more recognize, called return of premium. We call it premium recovery endorsement, or PRE. So at years 15, they get out there and they say, I don't really need this anymore. I really need some of the money back, so they can get 50% of the premiums paid back. In years 20 and 25, they can get up to 100% of their premiums paid, with a max 50% of the death benefit. So they get out 20, 25 years. Their retirement assets have been depleted. The legacy was, originally what they wanted to do, but now they really need this money back if they can get it. And so this enables them to get their premiums back. The next benefit is very unique in the industry. It's called a guaranteed exchange privilege. And this is available up to age 75, where if they buy this GUL, they've had it for 5 years, 10 years, as long as they're, say younger than 75, they can say, I really would like to have something, an accumulation product. So you could actually exchange some or all the death benefit on this GUL to one of our 2 accumulation IULs with no underwriting, and commissions are paid. It's almost like a term conversion, except it's on a GUL. They can exchange it for one of our 2 IULs. And so if something was to change, minimum death benefit, $50,000 up to age 70. But once they're age 71 or older, the minimum death benefit is $100,000. And again, all living benefits are on this product. The next one, we're going to move into the IUL side of the portfolio. So we believe that one size does not fit all. So one IUL does not fit everyone. So we have 3. And there's a reason for it. And I'm going to walk you through each of these. So the first one is Protection Builder IUL. This is like the GUL, right, where they primarily want a guaranteed death benefit for a specific period of time. Maybe they've dialed the guarantee to age 95 or 100 or whatever it may be. Same thing on the GUL, except this one actually does have cash value accumulation. So they have 2 types of exit strategies, or 2 ways to access access money. So this one also has the premium recovery endorsement, or the return of premium. The same rules on this product as the GUL. Years 15, 50%, years 20 and 25, 100%. But they also have cash value. So maybe they don't want to exercise the premium recovery endorsement, because when you exercise it, the policy ends. So they don't want to give up all their death benefit. They just need some cash. So now they have the cash value that's actually into the product, where if they needed like $5,000 or $10,000 at some point in the future, they could actually go in and take that loan on the policy and not have to give up the full policy. So there's 2 ways for the policyholder to access money. They don't need a death benefit, just give me my money back. I just need some cash. I don't want to give up the death benefit. Then they would access the cash value. And this product's used a lot of the times where it's an accumulation IUL. It's just not going to be as strong as the other accumulation IULs because it has the guaranteed death benefit. But this product gets used a lot for still retirement planning, but it's used more for accumulation, to where when they get out to age 65, 62, if they early retirement, they need to pay for health care. They need to buy med sup. There may be other things in retirement that they need some money for. And this is a good way to build up some cash for those needs. They don't need it for full income needs, but they do need it for some expense needs. And so the cash value built up in this could be used for any of those different needs. Same minimum death benefits. I showed people this because if you've written with us in the past, these products, these 2 guaranteed death benefit products, the minimum used to be 25. I just want to make sure that everybody knows the minimum now is 50, up to 70, and 171 plus.
And Gary, I would add on this product from an illustration standpoint that if you currently today, and this has been like this for the last couple of years and until we make a change, but right now the premium to guarantee the same death benefit on this product or the GUL, 95% of the time the premium is exactly the same. So it's kind of a no-brainer. If you could pay the same premium to guarantee the same $1 million, for example, why wouldn't you go with the one that has the opportunity to grow cash value versus the one that doesn't? The times where I see a premium difference is if you have somebody table rated, tobacco users, or sometimes a short pay. Then sometimes the GUL is a little bit better, but really for the price difference, you still should consider both and look at them both.
And one other thing, Shar, before we move to the next one is, if you currently write whole life, so if you're writing whole life life insurance, I would certainly take a look at this one. This competes with a whole life policy very well. Sometimes you can get more death benefit for the same premium, or for the same premium you get more cash value. So If you sell whole life, I would at least take a look at this product to compare the two. Now we're moving into the two accumulation IULs. So the Smart Builder is built for early cash value. It's built for that older age client that wants to put either like a single premium in, or they just want to do, a short pay of large premiums. This product is the only IUL in the marketplace that has zero premium load. Every other IUL has a premium load. This one has zero. So whatever premiums they're putting in, there's not any charge. So it allows the money to start working sooner. So generally in the first 10 years, this should be one of your best accumulating IULs because of that no premium load that's being charged. So we see it on the single premium is where we see it the most. We see it in business cases where the surrender charge option, the waive the surrender charge option is important. But it is a product that is really designed for short-term accumulation. So if somebody's 62 and they want to put some money into an IUL for retirement, they're not really concerned about what the cash value is at age 85. They're more concerned what the cash value looks like over the next 10 years. And so I would certainly, in that situation, look at the Smart Builder as an option because it does have better liquidity options for them to access money sooner than some of the other IULs. So this is one it's a very strong product for us, but it does have a certain specific niche that generally 60 and older or some type of business executive bonus case. Okay, now the new IUL, which it's the new version of our strongest accumulation IUL that we've had since 2006. So it's the newer version. It's kind of like your iPhone from iPhone 14 to iPhone 15. This is the Builder Plus 3. There's now the Builder Plus 4. And we always make changes and tweak it and try and, help it to perform better or illustrate better, whatever, we feel like the market is in need for. So this IUL, the BP4 as we call it, this is where it's going to excel. It's going to excel from an illustration perspective. So from the illustration, it's going to perform better. And I tell people all the time, it's from an illustration. The IULs that you sold 5 years ago, and you go out 20 years, and you take this product and you go out 20 years, the actual performance will probably not be that overly different. But from a design perspective and an illustration perspective, it's going to reflect better performance. I tell agents all the time, whatever you illustrate today doesn't have any impact on what the actual performance is going to be 20 years from now. But you need a tool. You need a tool to use with the clients today to show them what the potential is. And so this product is going to excel in that, specifically with ages 50 and older. That's where you're probably going to see the biggest difference. But ages 35, ages 45, we saw probably on average around 20-25% higher illustrated rates. There's going to be more death benefit, more potential death benefit. So on this design of this Builder Plus 4, the minimum death benefit is going to increase. So what happens when the death benefit increases? The target premium increases. So the actual targets are going to be higher than on the Builder Plus 3, primarily just because the minimum death benefit is going to be larger. This product is going to have more potential income. Goes back to the illustrated performance. You're going to see a higher income potential. And then higher cash value, that potential cash. I truly believe that when people get they use these IULs for accumulation, they're not all going to use it for an income stream. Some are going to use it to take a lump sum $100,000 out to buy a down payment on a beach house. They're all going to use it for something different. I know we illustrate income on a regular basis, but not everybody's going to use it for income. Some people are going to use it for cash purchases, so they're going to see higher cash value accumulation on this product.
And I just want to clarify that when we say more potential death benefit, that's typically due to, like, when you're using this product for max income, it's usually a minimum death benefit solve for max income, right? So if you're designing it that way, you might see that instead of the death benefit being $350, now it's $400. So if the death benefit, like what Gary was saying, if the death benefit is now 400, well, then the target went up. But if you were designing an illustration and it was an even 500,000 on the Builder Plus 3, and you run an even $500,000 death benefit on the Builder Plus 4, the targets are still exactly the same. We didn't change the target premium calculation, but because of some of what we're going to talk about on the next slide, on the next couple slides, some of the other changes we made, like under the hood of the product, if you will, have resulted in us being able to solve for a higher minimum death benefit. So besides what we already talked about, I mean, that's more death benefit protection, more living benefit protection for the client, more target premium income and cash go along with that too because of the other changes.
Thank you, Shar. That's why Shar adds so much value, because she runs illustrations and I do not. So thanks, Shar.
Yeah.
So the next one you'll see we've increased some of the caps, and we'll kind of talk a little bit about how you're able to do that, right? So higher caps, higher par rates. You can see what the crediting rate and the current rates and the illustrated rates are over on the right. So we lowered the account value charge. So all carriers have kind of the same budget to kind of work with option costs and things of that nature, that portfolio, all that is somewhat similar. So it's just a matter of where do we want to allocate this. And I like the fact that we lowered the account value charge, because before the Builder Plus 3, the account value charge was around 1.24, so 1.25%. Now it's 33 basis points, so it's a little more than 0.25% account value charge. So as the account value gets larger in years 20 and 25, that charge is much smaller than what it is on the Builder Plus 3. So that's where you're going to have the biggest impact, is as the account's growing, the account value charge is much smaller than what it was on the previous version.
And it's that bullet right there that Gary just explained that is mostly responsible for that change in the higher death benefit on the death benefit solve that I was just explaining. Because when those higher charges were in there, we could go lower, but because they're lower, we stay higher. And so that's a benefit for pretty much everybody out there, that it's a higher death benefit. Oops, next bullet, there you go.
Okay, so the persistency bonus, which we've had on all of our accumulation, the builder product over the years, it's been anywhere from 75 basis points to 1%. Some of it's been guaranteed, non-guaranteed. So the new product, we're going to offer a 50 basis point, 0.5% persistency bonus beginning year 11 and thereafter, every year thereafter. So bonuses are always being adjusted. Most carriers go up and down over a period of time. It's trying to get that perfect mix between bonuses and charges and fees, and trying to get the most out of these IULs over the long term. And so that's where you'll see different carriers over a period of time, where these will go up and down on newer products. And even in in-force products, you'll see caps and par rates adjust over a 20, 30-year period. Most all of your top carriers are trying to squeeze as much out of this for the consumer as we possibly can, creating the balance between performance and also, profitability as well. So this one, on the bonuses, you'll see that the bonuses are decreased a little bit from the previous version.
And then I will add, if you look at the chart, the very last two that are listed there are our volatility control index options. So if you've been writing our product in the past, that the first fidelity, the second from the bottom, is one that includes an extra bonus in years 1 through 10. And so that bonus, in addition to that, it's a much higher par. That bonus has decreased a little bit, but it's still, because we increased the par rate, which should be more beneficial. So that fidelity multi-factor point to point, not the high par one, that has a 1% bonus years 1 through 10, and then it gets the extra 50 basis point bonus years 11 and on. So then that would be 1.5, years 11 and on. And all the other ones would get the 0.5% that Gary mentioned.
Yeah, so if we look, since you went to that chart, let's kind of stay on that chart just for a minute. So if you ran the illustration on Monday, the blend that you're going to see that we default to is that S&P 500 cap point to point. That 10.5% right there, you'll see the cap at 10.5. You'll also see a floor of 0.25%. So it's not a 0% floor on that particular index. It's actually 0.25%. So we were able to add that to the S&P annual point to point and increase the caps on the S&P point to point, which gives you the illustrated rate. If you did 100% into that one, you would see an illustrated rate of 6.6. The other one that's going to blend on the default is the high par fidelity down there, 240% par rate. If you just did 100% into that, it's going to illustrate at 6.5. So the blend is going to be between those two. I'm a true believer in diversification. I think going between 2, 3, 4 different indices over a 20-year period and making adjustments along the way is the best overall strategy. But this just kind of gives you an idea of some of the changes. So those par rates going on the two fidelities from 200 are going up to 200 on the one and up to 240 on the other. If you think about it, when those indexes have a lower than normal performing year, like 2% or 3%, and you apply that par rate, it really accelerates what that actual index crediting rate is. And so with the markets the way they are right now, how they performing, and that's the one thing about interest rates. As interest rates go up and down, so do caps and par rates. You'll see that for the full duration of any IUL. And so right now overall, I think most carriers are in a pretty good position to increase some of their caps and increase some of their par rates. But that won't be, just full disclosure, every carrier should give you this. It won't be this for the full duration, 20, 30, 40-year period of an IUL. It will be adjusted over time. So here, we've already mentioned this on the S&P. We did add a 0.25% floor versus 0% floor on the S&P annual point to point. The minimum account value is 2%. That means you'll see that on the illustration on the guaranteed side of the ledger, that we do have a minimum account value that the client would never walk away. If they surrendered it or it lapsed, we would true them up to at least 2%. To give you an example, if they got into this product and 3 years, the markets were doing terrible and they got 0% for 2 or 3 years in a row, they said, this is not working for me, they could walk away and still get 2%. The monthly sweeps, in the past, we had daily sweeps. Now we've moved it to monthly sweeps. And then flexible loan options. We have 3 loan options, and we have 2 different participating loans. A variable loan, which is participating, which most of you, if you write IULs, you're very familiar with. But we also have a fixed participating loan. And we do think that having both of those in any given environment, because we do allow them to switch loans. And each given year they could switch a loan and not have to pay off the loan and adjust to the new loan type based on what the environment is. So IULs should be designed to be very flexible, even on the loan side of the equation. So you want to make sure the IULs you use, that they do have flexible loan options to where the client does not have to pay off the loan and they can move to a different loan, at least once a year. 6% premium load. Remember I mentioned the Smart Builder has 0 premium load. That's the only IUL. This Builder 4 has a 6% premium load for all years. The previous version had 5%. And it's only on premium. So if you get a short pay, a 5 pay, 10 pay, the premium load goes away once they stop paying premium anyway. If they pay premiums over 20 years, then they'll have the premium load for 20 years. Charles, since this is illustration driven and income potential, I'm going to let you kind of walk through this one.
All right, sure. So this is just an example snapshot. Basically, let's draw a line right here. we've got female on this side, male on this side. We did preferred non-tobacco and standard preferred plus non-tobacco, which was formerly our super preferred. So we're taking on a different name for our best rate class, and then standard. So we just did a couple different ages here. This was a minimum non-MAC death benefit solve using an increasing death benefit option that switches to level after they're done paying for to retirement age, and then we showed 20 years of distributions. I think this is kind of a common measuring stick amongst all carriers when they put out their pieces of where they rank. But I would sincerely recommend that you consider showing our income longer than 20 years because nobody wants to outlive the income that was illustrated. So our income is really strong, all the way to 100 or 120. So you'll want to consider that versus just stopping it at 84. People are living longer than that. And you might also want to consider, instead of increasing, switching to level. On one of our next slides here, we're going to talk about a third death benefit option that we have that is called return of premium. So instead of the death benefit increasing by the cash value, it increases by the premiums paid. It's a mirror kind of to this. And what it does is when the premiums stop being paid, it just stops increasing. Whereas here, you have to help your client submit a form to North American in year 20 or at age 66, and say, oh, we got to remember to change the death benefit option to level. With the one that is tied to premiums, you don't have to do that because it takes care of itself. So you might want to consider doing ROP death benefit option and even level just to get a higher death benefit, more coverage. But I also want to point out here is between our previous version, you're going to see income that's illustrating nearly 25% higher than our previous product. And then we already talked about how that can impact the targets. And we also looked at the caps and pars, how those have changed. All a perfect storm to help, a better potential here.
So these are the loan options we talked about. So you have your standard loan. This is just I know some advisors like to use standard loan just to be the most, be as conservative as they possibly can. So we have the standard loan, and it's a wash loan in year 6. So charge interest and credit the same amount. So it's a wash loan. The two loans that are used probably the most on the illustrations, at least with North American, is the fixed participating, which I think is the default. Char, if I'm correct, it's still the default on the BP4.
Yes, it is.
Yeah, so it's available beginning year 3. It's currently at 5.7 with an 8% cap, and then we currently apply a 2% bonus. So you'll see a net, if it's currently 5.7, we apply a bonus, and you're looking at a net of 3.7. Variable loan is available in year 3. Currently it's 5.5 with a cap of 6%. And we've had these caps for a very long time. That's something that's very important on variable loans, is to make sure that there's some type of cap so it doesn't get too high. And having the flexibility, as I mentioned before, to switch between these loan types without a cash payoff. They can do it once a year. Probably wouldn't need to do it once a year, but flexibility to do it once a year. But we never know what the environment's going to be, because when you're illustrating these loans today in 2024, but they may not be taking an actual loan for 20, 25 years, we don't know what the interest rate environment, we don't know what the environment's going to be when they do start taking, some type of distribution. So I think it's important to have that much flexibility and options when they get to that point of making those decisions. Now here's the death benefit options. Shar mentioned these. So you can do the level death benefit where you specify, the amount of death benefit that you want. You've got the increasing, which is generally increasing, switching the level at some point in the future. Shar touched on that somebody's got to make that change, where you start with the minimum death benefit, and then it's the account values added to the death benefit to pay the full death benefit. But to change it, somebody's got to make that a manual change. Return of premium, it's just a cool way to do it where you get that death benefit, and then as they pay premiums, that's when the death benefit increases, and it only increases equal to what the premiums were paid. Now, we would all like to think that when we show that they're paying $500 a month, which would be $6,000 a year, that's what they're going to do every single year. I can tell you from experience, that's probably not going to happen. Either in year 7 or year 12 or year 15, they're going to have a down year. They're going to say, I want to change this to a lower amount. I want to, there's going to be some adjustments along the way. And the death benefit's only going to increase equal to whatever premiums they pay. And then once they stop paying premiums, it levelizes on its own and doesn't go up anymore. Premium deposit account, just want to touch on this. Whenever you come across a client, sometimes you'll see this with business owners where they don't want to do this, monthly thing. I got $100,000. I like the concept. I like the idea. Can I put $100,000 into this? Well, you can't put $100,000 single premium into the life product and keep it a non-MEC or keep it from being taxable on distribution. But you can use a premium deposit account, drop the $100,000 in, and do a 3 to 10 pay, and it'll do it on its own. The client only writes one check, it gets deposited into the PDA. We do the rest in paying the premiums over that period. It's currently 5% for the BP4 and Smart Builder 3, which means they put $100,000 in single premium. What's not been moved over to the BP4, like they pay the first premium. There's 4 years left in there. That will earn 5%, and then whatever the remaining balance is will continue to earn the 5%. Anything you want to add there, Shar? All good?
I would just say that a lot of times I get requests for a single pay, even on the IUL or the GUL, and it's actually counterproductive to do a single pay for a guaranteed death benefit. Let's say they don't care that it's a MEC. It can be counterproductive because you can actually end up getting a higher death benefit if you structure it over a shorter pay by using our PDA. So it'll still feel like a single pay to the client, but by stretching it out, usually between 5 to 7 years, we might get them an extra $25,000 a death benefit, or even more, depending on what the numbers are. So it's usually counterproductive to just use a single premium if you don't care about the MEC and you're just trying to secure a death benefit. So definitely look at the PDA. I think it's only not available in one state, and that I think is Pennsylvania.
Yep. This is just showing you what the new annual statements look like on our IULs. If we had the old, a very old system. I think most carriers are still on some type of old system where the annual statements they're not appealing. They're not easy to navigate. They're not easy to explain. We introduced this last year. And so I think when you do annual reviews and when your client gets the annual statement, it'll be much more user friendly. It's got some color to it. It's a little bit more eye appealing, and I think it'll be a whole lot easier for them to understand, what all the benefits are and where their account value is and so forth. So we just wanted to show it to you to make sure that you see this as a new annual statement that the consumer will be receiving. Protected death benefit. We don't have a lot of time. I could do a whole presentation on just this. This was the game changer for me when I joined North American 15 years ago. Many of you probably don't know, I was an advisor 15 years, a fee-based advisor, and of all the products that North American had, all the benefits riders, everything was great. This is the one that stood out. This is the one from a consumer perspective, gives them the most power, the most flexibility when they get to once they've been in the policy for 15 years, they turn at least 65. There's so much they can do with this policy. They can decide they want to leave a guaranteed legacy, so they can change some of the death benefit to guaranteed death benefit, leave some of it non-guaranteed. They can They can take a lump sum out of the policy and put into a FIA and get guaranteed income. It just creates so much flexibility and strategy for the consumer that you can't find anywhere else. This doesn't exist in any other IUL. And this benefit is on all three of our IULs. And to me, this was the biggest game changer coming from an advisor background, that I would love to have had all my clients have this ability to do this. So it would have made my life a whole lot easier as an advisor, because when you sell an IUL to a 30-year-old, 40-year-old, 50-year-old, I promise you, when they get to be 65, 70, 75, their objectives completely change. It's funny how legacy becomes important the closer you get to your mortality. And when you're in a non-guaranteed death benefit product, there's just not a lot you can do with it. And this just gives them so much power. So maybe one day I can do a webinar just on this and go a little bit deeper and give you some examples. But to me, this was the biggest game changer. And maybe we can talk more about it in another presentation. Living benefits, real quick. We have it on both. The biggest difference, I'm not going to get real deep into this. We can actually provide a copy of this presentation that Bill and the team can share. But on our term, we do underwrite at the time of claim. So we do determine if it's on a critical, if it's severe, if it's minor, severe, or moderate or severe. So we had a 48-year-old female, had a term, diagnosed with breast cancer. They caught it early, had very little impact on her life expectancy. She had a term, and there was it wasn't even a minor, because of what was in her medical records, that they caught it early and was treated early, and she was totally clean. But we did tell her that if she converted some of it over to one of our permanent products, she could refile the claim, and we don't have claims underwriting on the permanent products. She could refile the claim, and then we would actually just need a doctor to certify, and we cut her a check. So it's good to have both. The critical illness on the term, if they're eligible for severe, it's a much higher payout than what you get on the permanent with no claims underwriting. But having a combination of the two is actually a pretty cool thing. But her being able to just convert it, refile the claim, was a pretty cool thing to be able to do. Accelerated underwriting, ages 18 to 50, up to $2 million of face amount. And ages 51 to 60 up to 1 million. I would set the expectation, if you're going to set an expectation, that it's about a 50-50 chance that they will go through without exam and labs. It's not 100%, right? This is not a simplified issue underwriting. We're going to pull some MIB, we're going to pull some script check, we're going to do the due diligence behind the scenes using a risk classifier score. And we're going to determine whether or not we feel like we need to have labs and exams. Sometimes we just need labs. We don't need APS. And it just determines what we see. So I would make sure if you set an expectation that they have a 50-50 chance of not having to do exam and labs. I would certainly not set the expectation or assume that it's going to be 100%, because right now we're about right close to 60%. So 60% of that ages 18 to 60 are qualifying without exam and labs, but that means around 40% are not. So I would just set the expectation at 50-50. We do have a right-of-way, which is our accelerated underwriting. We do have a guide and build chart. Sometimes everything looks good, but their build is not where we need it to be. That can kick them out. There's a medical reference library. If there's a condition they have, you can click on it. It'll tell you what we're looking for. Online part 2 is once you submit the app, we will send a link to the consumer to answer some medical questions. But on this product, on the previous Smart Builder, new product we just rolled out, there is an agent assist available to where if you click that box that you want the link for the online part 2 sent to you, and you complete it with the client, you can do that. Or if you just want the online part 2 to go directly to the client and you prepare them for it and they do it and hit submit, that's fine. But you do have an option now that you didn't have before. We do not do tele-interviews unless it's requested for language, or computer, not savvy with a computer. Otherwise, we don't do tele-interviews. Everything is online. there anything you want to add to this? Because we need to finish up here. This is
Yep,
the last one.
Yep,
And
go
I
ahead.
always add this one. Char put this one together a while back, and I like to use this one because it's easier to deal with this on the front end than it is to deal with it on the back end. 4 key things. When you know someone's going to have labs, you need to have the conversation with them on these 4 things. Limit your coffee intake, smoking, and exercise day of labs. So if somebody has a lab at 9 o'clock in the morning, don't go to the gym, don't walk the neighborhood, don't ride the bike, don't do anything before those labs. Don't smoke or use tobacco right before the labs. Don't drink a cup of coffee before the labs. Drink 1 to 2 glasses of water prior to the labs. Try and schedule morning appointments with no food if possible, and no alcohol 24 hours before the labs. This is preparing them, because once something shows up in their blood work, it is very difficult to go back.
There's no do-over.
There's no do-over. So this is just to help you, not just with us, with any carrier where you're getting labs done. Prepare the client, these 4 key things, and the lab work should go according to, there's not going to be any skewed blood work because of some of these things that they did before the labs. So I just like to plug this in there just as a reminder. And I think that's it. This is just a slide on our strength, private ownership, A+ rating. We wouldn't be probably in Levinson's portfolio if we weren't a good company, right, Bill? So this 100%. Is our end of our presentation. This is the end of our presentation, Bill.
Perfect. That was great. I know it was a lot of information, but that was great. If you notice, we came full circle talking about ratings and stability, financials. We started there and ended there, and it's very, very important. And Gary, what you said is exactly right. You wouldn't be part of our A-list of carriers if you weren't. So good stuff. All right, I have a few slides, and then I'm going to wrap up in like 3 to 4 minutes here to make sure. I know we're a little late, but I want to get everyone out before 10 after 3 Eastern time. So I have just a couple things, and then just know too, we're going to send out a thank you email to everyone on. We'll include contracting, all the latest brochures, a lot of the stuff that Gary just touched on. And like I said, once you're appointed, you're active. If we need to patch in Char or Gary back on a call, okay, Charlene is great with illustrations, figuring out the best product for certain clients, so she can help as well. But you got to be appointed first. So make sure you fill out your contracting, okay? If you have your first app, they will appoint you. If you're appointed today with another IMO, you want to move to Levinson, we match or beat your commissions, plus you can take advantage of the 2 incentives, cash for contracting or orphans, free orphans, for your first placed application. On the right-hand side is going to be all of North American's marketing material. And then I have a few slides. I'm going to go very fast, so just take some notes as we go. And if you need us to dive in deeper, let us know after the call. Shoot me an email or call any one of our marketers, and we'll make sure we dive in as deep as you need us to go. This is awesome. I love this slide because this simplifies your world, right? When you're selling North American, you literally just go on our website. Okay, I know you have a login, you have access to your scorecard and mobile app. Everything is very simple. We try to make it very user-friendly, but with North American specifically, we are a pilot agency with iPipeline, and North American is one of the pilot companies in the program. You can run an illustration right from our website, even a permanent illustration, and then all of that information on the client gets populated right into an e-app with just pressing one button. And you can do this with your consumer, okay? So it's very, very easy, or through Zoom or whatever. But that's the 3-step process, left-hand side, and then boom, 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 you are done, okay? And then everything shows up in your back office. Let's keep moving forward. There we go, perfect. Okay, this is another presentation, and an awesome presentation on IUL sales in general, and then using IUL for business owners. And we have some great consumer pre-approved videos, marketing pieces that you can send out, and then you can use our CRM, okay, the agency automator, to literally share business owner names, emails, phone numbers, and addresses so you can put together a marketing campaign and create your own leads. Okay, so I'm not going to say it's easy, but all the resources are there for you, but you got to try. You got to jump in. I mean, literally, you get 1 out of 10, like our agent Terry, right? He crushed it. He got 2 out of 15, and he's just getting started. But you see what the opportunity is. You just got to take advantage of this stuff, and it's all free. Okay, let's keep moving forward. The Stonewood platform, this is another great resource, and it's free. So if you want a Levinson marketer to run a sample consumer sales illustration for you, they can plug in North American and then put together the sales kit that you can present to a consumer, and it literally tees up the sale for you. Okay, and then if, like I said, if you want to become a member, there's a discounted price if you're an active Levinson agent. Okay, and then we even have an option where we pay for the program for you. Okay, so it's free as long as you're writing enough IUL premium with us, with any company. Let's keep moving forward. The lead program I spoke about earlier with our agent Terry, everyone was asking, I saw in the chat box, which platform is that? I want to get going. Okay, well, number one, as long as you're active with a mortgage protection term carrier of ours, then you get full access to the co-op discounted rate. And then this is the program that you're looking at on the slide. So we'll put this in the thank you email as well. Let's keep moving. So these are a few social media sample posts that are performing great. As you can see, over 2,000 likes and hundreds of comments. Every comment is potentially a new lead. Okay, that's how you got to look at this. You don't have to reinvent the wheel. I always say just change a few spokes, right? So here, this is already done for you. Okay, we'll include this slide in the thank you email. But I mean, you can see how simple this is, and look at the activity that this has created. Okay, very, very simple. Let's keep going. These are some great training tools, platforms for you to dive in deeper. Remember how I was saying earlier, we have agents out there, over 24,000, and they love hearing from us and our team, but when they hear from another agent, that's what separates, right? The pros, the rookies, the seasoned agents, the MDRT agents. Well, here's a chance to get to sit down with some of the top MDRT agents, okay, and pick their brain and see what's working for them. So if you scroll over to the right side, these are 4 example episodes where I sit down with some of our top agents in the industry, okay, and they all have their own little niche. But I promise you, if you take the time, each one is about an hour, if you take the time and listen to this, the next time you walk around the block or do yoga or work out, whatever, on a weekend, it doesn't matter, I promise you there's golden nuggets in every single one that you can use in your everyday practice to change your business for the better, okay? And I'm on record saying it, I promise, I guarantee it. Okay, if you listen to all 4 of those and you come call me or come to the office and say, Bill, I didn't learn one thing, I will literally, I don't know, but I'll put together an incentive just for you. Okay, that's how I'm willing to put my name on the line. That's how confident I am in each presenter on that podcast. Left-hand side, I'm just as confident in this guest speaker, Charles, when it comes to annuities. He's the author, the famous author of the 60-second close. Guy is a beast. Okay, we're doing a workshop with him as we speak. We have agents that we had an agent yesterday wrote his first $500,000 annuity after the Charles workshop. Okay, so you got to dive in. It's all free, but you got to jump in and take the time. My second to last slide, and then we'll put a bow on this. These are future training events that are coming up around the corner, and you know we have you covered when it comes to guaranteed issue burial insurance, right, all the way to hybrid life and annuity products with LTC. We have every corner covered. We don't just put our toe in the water, right? We are 100% committed to bringing you the best, and this is the proof in the pudding. On the top, the latest SBLI final expense product. We have a direct IMO contract. It's a newer product and one of the most competitive products for non-smokers, especially. On the 15th is our official rollout. Banner Life is back with the latest incentive and term-to-term conversion program, right? Gives your client an opportunity to buy up without going through underwriting again. Insure Me Now Direct, the latest and greatest with Assurity Life is back, bigger than ever. DI, CI, term, guaranteed issue accident, everything is on the platform, instant decision, direct to consumer. Just under that is Ken. So Ken is our go-to when it comes to social media, website creation. He's going to be on. We have some latest AI additions. We have an agency option if you're a GA or MGA. That's on the 19th. And then just under that, speaking of hybrids, is one of the top, One America. We're going to talk all about their latest product launch. Seems like everyone's coming out with new products now. We all know why, okay? But we got to jump in, and we have to know what works, what doesn't, and what we're going to use and stick with for our clients depending on their needs. Let's keep going forward. My last slide in our giveaway, my Positive Tuesday quote of the day. We'll start there. In fact, on the bottom right-hand side, that's Charles in that picture. So we'll end with this quote, and then I'm going to have my question. I know you're all waiting patiently, and I'm sorry I'm a little over. My quote of the day: most successful people have suffered a painful story. Most painful stories have a successful ending. Accept the pain as part of the process. That is so true. You can't get held up, right? You got to keep moving and pushing forward. Don't look back, right? Learn from the past, and the rest is history, okay? I always say blinders on, laser focus 24/7. That's how I run my life, personal and business. I'm not perfect, but I do the best I can. I hope you do the same. My question of the day: make sure your little fingers are on the keyboard because you got to be quick. And remember, there's two. So even the second place person, okay, when you write your first North American app after today, Apple iWatch. You got to write and place it, Apple iWatch. Okay, if you answer first and correct, even with no application, Apple AirPods, latest generation. Question is, you got to tell me, with our yacht charter annuity incentive, exclusive yacht charter out of Fort Lauderdale, what is the minimum FIA premium required to win the trip, including the round trip airfare from anywhere in the country for you and a guest, plus a $250 gift card. Okay, it's the yacht charter plus the round trip airfare for you and a guest, plus the $250 gift card. Tell me the minimum FIA premium needed. Andrew's going to tell me who was first and who was second, and you already know the rules. Second has to write a North American app, Apple iWatch. First, Apple AirPods, no app needed, as long as you're an active agent with Levinson. Andrew, who was number 1 and 2?
Okay, number 1 is Prognesh. Prognesh P is number 1.
Congrats, Prognesh. Apple AirPods. And number 2?
Number 2 is Samuel C. Samuel C.
Samuel C. Congrats, Apple iWatch with your first North American app. The premium doesn't matter, by the way. We're not playing that game. Okay, you submit an app, place it, boom, Apple iWatch. The answer was $1.5 million in FIA premium. Let's have a great day. Thank you for taking the time. If you need anything, and I mean this, please call, email, send a message through our website. We have an AI chat bot. We don't care. Just get a hold of us, okay? And we're there for you every step of the way. Great selling. Thanks again.